Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for episode for May 1st, 2023. We are recording this at 1 p.m. Eastern Time, and this is episode number 385. My name is David Kosmeter. I am the creator of TimingResearch.com, and today I've arranged for our guests today to be Sonny Harris, Harry Boxer, and Michael Filighera. And the option professor is back to moderate, so I'm going to go ahead and turn it over to him.
Okay, great. Thanks, David. And thanks, everybody, for being here. We got a big week coming up. You got earnings, you got the Fed, and you got all kinds of things that are going on. Started out with the ISM numbers today. But before we get started, let's introduce everybody. Go around the horn. We'll start with Sonny Harris. Sonny, a little background on yourself and what's going on at Money Mentor.
Oh, thank you. I'm a PhD mathematician, trader, programmer, author, and professional trader for 42 years now. I do mentoring, tutoring, consulting, coaching, easy language, custom programming, and I'm almost done with my 7th book on trading.
Sounds great. And at the end, you'll explain a little bit more. As we go on, you'll explain more about the Sonny bands, of course, too.
Of course.
Yeah. All right, Michael Filighera, let's hear about yourself and what's going on at your company.
Okay. Good morning, good afternoon, everybody. My name is Michael Filighera. I am with TradersHelpingTraders.com and LogicalSignals.com. And then one last one, Eye of the Storm Podcast.com. And currently, I have a trade room that I run, and also, let me just back up 1 second. I have also over 40 years experience. I was an options market maker here in San Francisco on the Pacific Options Exchange, also on the London traded options market, the European Options Exchange in Amsterdam, and also the DTB in Germany before returning back here to San Francisco. So over 40 years trading options and also now trading futures. And so I have a trade room. I produce a daily update, Elliott Wave update on the S&P 500 and the NASDAQ futures. And then once a week, I do a podcast entitled The Big Picture Update, and then have also guests for my podcast.
Hey, perfect. And of course, the ever popular Harry Boxer. Harry, a quick background and what's going on in your company?
Well, my firm is thetechtrader.com. It's a trading room with several hundred traders, very astute people, I might add. Very active site for day trading. We do some swing trading as well. I publish 3 to 5 swing trades a week, but I'm looking at 8 to 10, if not more, day trades. We're very actively involved with analyzing 1-minute intraday day trade patterns based on price volume surges and pattern recognition. I've been doing this for over 55 years. And the Tech Trader has been around since 2001. I understood from several people, it's one of the first trading rooms ever on the internet. We always offer 2 free weeks, so come on in anytime you want and take a look at what we're up to. But I'm real happy to be here today and joining my friends Sonny and Mike.
Thank you.
And it's great to have a good room where you have a lot of exciting ideas exchanged too, right?
Right, exactly. And I always tell my people, I have 2 eyes. I can watch just so many stocks, but I'm constantly getting ideas from my traders. Some of them have been trading for 20 or 30 years, and they're really bright people that know technical patterns. So, they bring up many ideas that I haven't even seen, and some of them very profitable trades. We had a couple today.
Yeah, right. That's great. Okay, guys, we started out today. I don't know exactly where we started on S&P because I've been watching the S&P and it's like all over the road like a drunk driver today. So let's go with 41.7. Let's go with 41.70 as a starting point. And where do you think it'll be on Friday? Up, down, or sideways? And what's your conviction on it? So, Sonny, from about 41.70, let's say where we're going to end on Friday.
What is that on? The SPY?
Oh, yeah, S&P, the one that people watch, S&P 500.
PX.
Yeah, well, like I say, there's going to be a little bit of difference there. That whatever the opening was on the futures, we're talking up, down, or sideways.
I think we're going up. I think we're on the S&P futures contract. I think we're going to 42.44.
Okay, so we're going to take out that high of 4,200 this week.
I think so.
Yep. Okay. And how do you feel about it? 50-50 above or less, or what do you think? What's
Oh,
your
I'm
number?
always 50-50 because you know how fickle that market can be. It can turn around on a pin.
But more probable than not.
More probable than not, I would say.
All right, Michael, where are you at from here to eternity?
We're talking higher or lower by Friday?
Uh-huh.
Lower.
Yeah, Friday.
I
Lower?
I actually
And,
agree with
what-
Sonny. I think we could definitely get to 42.40 to 42.60, but I think we do that
Yeah.
before Friday
Good point.
And then come
and then come back
below
down
where we are now.
and then come back below
got you.
where we are. Yes.
That's a good point.
All right, Harry Boxer, I don't know if this is not exactly the way you trade, but we'll put you in the hot seat anyway. What do you think?
No problem at all. Based on my work and the work of one of my esteemed colleagues, Avi Gilbert from LA Wave Trader, we believe the market has a shot at 4,300, and pretty quickly. There's a possibility of melt up here, and the reason I say that is if you take a look at the prior highs around 41, 50, 60 range, we've gone through that, and we have a chance of a melt up here. Now, I do agree with Mike and Sonny that I think we can have a pop up, then a pullback, and then a big melt up. I kind of feel like that's what's going to happen. They're going to do a retest for after they move a little bit, say to 42.2025, maybe retest 41.50.75, and then boom, 42.90 to 4,300 or better.
Yeah, another interesting stat I saw, ETF volume last month, I think, was the lowest since 2020. So because of the tight range we've been in and the VIX in the 15 handle, we are definitely seeing people just, getting very quiet. And sometimes the quiet is before the storm, right?
That's exactly right.
Yeah, so that could be interesting. Okay, with regards to some of the different markets, Sonny, do you want to put up your Sonny bands on some of these things, and we'll take a look and go around the horn on some of these things?
I'd love to. Thank you. That's when the screen number 5. How's that? You see it?
I see it.
Yep.
All right, fantastic. So here's
So
where
let's go
I
over the
keep
major
going.
indexes. Let's go to the 3 major indexes of S&P, the QQQ, and IWM for small caps, because some people are saying that the small caps not going anywhere is a sign that we're not going to be going into a bull market of any type. But what are you seeing on the? Let's start with S&P.
Well, there's the futures contract. If you want to see the SPY, I could put that up instead. But this is where I'm getting my.
It's the same difference. It's the same difference.
It's got a little forward cost in there, but this is where I think we're going. We're going to test this value, and I guess Michael's right. We could test it in 2 or 3 days and then drop back from it. That would make sense. I draw lines on things that I call attractors, and there's that one. So I think that's where we're going. And Sunny Bands, you'll see, gave a buy signal right back here. So it's been long this whole time.
Yeah.
From
even with the pullback, it didn't get violated. It was just really a reversion to the mean.
Yep. And so it's been long from 38. What does that say? 49 to 42.22.
And 42.22 is the upper band right now?
It's, yes, 42.22 is right there with the upper band.
I got you. All right, let's throw the QQQ up there and see what that looks like.
And it's
then
higher yet. So we're
up against the upper end of it, but you're looking, it might break through the band, you think? Yep.
Right there was the buy signal down at about 288, and now we're up to 323. And I think this thing's going to break that upper band and keep on going, at least for a few days.
Yeah.
We've got gold on top.
The growth has outperformed value pretty much since December, and so that's definitely been the one to be in versus versus the staples or the dividend payers. The tech has really outperformed. What about IWM?
Let's get back here.
IWM is a Russell 2000.
And it's not doing this what the other two are doing, is it? It's
and that's what people think is telling you that whatever happens here is a temporary rally, and we have got more wood to chop later in the year on the downside.
Well, can I disagree with you guys? It's historical that small caps never lead; they always trail. And when you start, and most rallies start with the big boys, and then intermediates follow along, and then the IWM comes along with the Russell 2000.
Oh, okay.
If you take a look at the base patterns forming, what I'm seeing here is a inverse head and shoulders, and then a rollover retest of the Bollinger Band, and now
Yeah.
moving back up to what looks like we get over 180. And I've told my people that all for 2 months now. We can get over 180. We may have a breakout, and I'm starting to see a lot of low price stocks, biotechs, Chinese, whatever, really coming on here. So this may need to be, you could be watching the beginnings of a big movement in the low price stocks, which have been trailing, no question. But
Yeah.
I think it's going to surprise to the upside.
Yeah, I had heard the direct opposite. So it just, people have all different kinds of views on what leads, what doesn't lead. But your view is that the small caps are a laggard, not a leader.
Always, every bull market in history has gone with the quality stuff first, the growth stuff, and then you'll start to see intermediate plays, and then the garbage at the very tail end of every bull market. That's when the garbage stocks really start to run. So they also start late and finish late.
Right. Okay, good. I definitely
interesting,
see that if it does start getting above 180, 185, 190, there's a big air pocket above it, right?
That's right.
Yeah. Okay. And it has a little bit of that pullback, but doesn't take out the low. And if it starts taking out the other side, that formation that can sometimes be very, very aggressive on the upside.
Yeah,
And
I
we've
can see
got a tractor right here. The tractor that I've drawn is holding it down at this point. If it breaks up above that attractor at like 177 and 178, then it's going to go on up to the upper band at 182.
right.
Yeah, that looks pretty good. All right, well, that gives us a little bit of an idea on that. Since we have it up here, why don't we hit a couple more markets real quick? One will be crude oil, which the whole planet is thinking is going to $100 a barrel, except it's at 75.
Not me.
It's at 75, and it just gave a buy signal on the sunny bands, but I'm not buying yet because the next bar is red, the DMA is flat, sunny bands are widening. I don't think that we're going up yet.
But it does look like a cupping handle or V bottom and right hand extension. So the key is, you get above 84, it's off to the races. But I'm bearish on oil. I mean, this is a bullish formation, but if you look at the longer term chart, go back a little bit, you'll see a downtrend in play. There's a downtrend, a distinct downtrend. But if it breaks, you see the downtrend? So, but if it breaks up above that purple band there, and breaks out above that prior high, that's a whole different ballgame for me. That's where I would cover shorts and go long. But I right now have 3 oils on the short side for a month now, and all of them are down between 10 and 20%.
Yeah, because again, there's a lot of people who are long this thing, thinking it's definitely going up because of China's demand and the supply. I guess the supplies and inventories have been dropping a bit, but it hasn't really helped the price.
Yeah, this is this has been artificially held up by the Saudis cutting production.
Right.
Yeah.
I was just going to say
let's take a look at gold, and that obviously has had a big run, and now it's kind of in a range. And what's going to happen next?
This is the weekly chart on that, and you can see the trend lines up on this one, and I think we're going back up over 2,000 again.
I agree. If you take a look at Sunny's chart, it's a 1, 2, 3, and wave 4 is underway. There's a 5th wave to come, and it's going to probably take you up to that level at that 2155 anyway. We'll see what happens beyond that.
Yeah, right there.
Yeah, I mean, you get up there, it could go parabolic on you, right?
That's right. It goes through that. It could be one of those melt-ups.
Yeah, that would be lovely.
I have a little bit of a different count there, Harry, but that's okay.
Say again?
I'm going to jump over.
I have a different count than what you just stated.
I just got one more. Yeah, I got 2 more actually for her, for Sunny. One is going to be on the 10-year note, which I think is TNX, or $sign TNX.
$sign TN is what I have. I mean, no. How about just?
I thought it was TNX or $sign TNX.
No, neither one.
TN.X maybe.
TNX.
On Thinkorswim, it's /ZN.
Well, that is definitely different than what I've been seeing. You gotta get that ST out of there or whatever. There you go.
None of those.
There-
None of those. How about if we look
It
at
said
bonds?
Well, yeah,
Forward
I haven't put up
slash-
anything to treasury bonds. Yeah, treasury bonds. I like looking at the 10-year note because it's the actual yield, but we can do this too. And we all know that when they go down, yields are rising, right?
Right?
Yes.
And we've got a nice strong attractor right there that's keeping it down. See it hit
And
this in
today's
the
action
bottom,
are
bounce,
to the
hit and
downside,
go
right?
through.
Yeah.
Hit it, hit it, hit it.
No, that's pretty
Yeah.
similar to the IWM chart. It's got a nice V bottom, right hand extension. It's got a base, and if you can
Yeah.
see, it's very similar. And if it pops up above that second green band,
Mhm.
this thing
Yeah.
might roll all the way up to 144, 45, 48 range. The
So you
previous-
think interest rates are gonna drop?
Well, I
Well,
mean,
I think what he's saying is if you saw yields drop under 340 or 335 or 330, the IWM would fly.
Hmm. I don't think we're
So
in
would the
interest rate.
S&P and the
Because
NASDAQ and everything else.
If the yields
Everything.
drop, then this thing would go up, right?
Yeah,
a lot of
I
it's
don't
been
think,
discounted.
I don't think the yields are gonna drop anytime soon.
Mm.
They may not drop, but they could halt in this range.
Yeah, we need some more unemployment first.
Now look at
Start.
that last thing I was going to tell you about the U.S. dollar. DXY, is it?
Or thing,
Or dollar index?
$4.
There's the dollar index.
Yeah, that's the one.
Is it
So-
oversold to you, Sonny, or is it just very weak and that's all you can say?
It's weak, but it did give a Sunny Bands buy signal, but it's only gonna go up to the 104 level. Now I'll have to
Yeah,
test that level at the DMA, my dynamic moving average. It'll test that level
Right.
and then come back down.
Yeah, I agree with her.
Yeah, my feeling is it gets above 106, then call me. If it can't get above 106, leave me alone. Yeah.
But don't forget to leave us your number. And then
Yeah.
put
Well,
us
I mean,
on
because like
mute.
I say, it's kind of like Harry said with crude. I mean, when it gets above 84, give me a ring.
I've got Jim's.
I
number.
like
It's
that,
1.
Jim. I like that a lot.
Meanwhile,
All right, let's switch it.
listen, crude oil is below its 50-day moving average today. It's the number one biggest losing group, energy, down 1.3% today.
Really?
Right
I
now,
think they're also questioning how strong the China demand will actually be. They're starting to question that a little bit. Michael, can you put up stuff that you'd like to talk about, like on the Elliott wave or the Fibonacci numbers, and we'll go through the same
Sure.
markets and get your perspective?
Okay, hold on. Put this up.
Because that's the good stuff. Is you guys all have your own your own formulas. You know what I mean?
First thing I want to do is I want to go back to gold.
Okay, let's start out whatever you want to start out with.
By the way, Harry, it's not that I disagree with your count. I'm just more bullish on gold at the moment.
I'm bullish
And-
too.
And so, but because you were talking about 1, 2, 3, and the 4. And
That's exactly what I
actually
said.
what I have it down is that I think we completed a 4th wave here, and this is wave 1 of the next 5 up, and that's wave 2. And now we're breaking and subdividing within that 3rd wave. And what we've done is a 1 and a 2. So I'm
I
kind of
agree.
looking for gold to turn and just really, it's like this morning we walked in and we saw this beautiful, huge rally, push it all the way up. And then what it has been doing this past several sessions is it gets up above 2000, puts in a beautiful top, and then just spends the rest of the session taking it all back and then some. So I'm waiting for this small second wave to complete. It's got support at 1973. It could drop down, touch the 50 or 50 EMA here at 1962, 63, or it can actually drop if it's going to do a big swoosh lower. It can get down to 1945 and then just start to go. My first upside target is 2135 once it starts to break out. And then above that, we're going to 2300. And I think this particular wave pattern that's in progress right now can take us there. Now, I do think there's plenty of catalysts that can take this particular market there. One of them being that something that Jim and I and others here within this program we've talked about is that there's been a lot of central bank buying. And with the digitalization of currency globally, I realize that central banks know that they better back it with something other than the good faith and credit of whatever the issuing country may carry. So I'm seeing that it's a really gold is being purchased in great quantities by China, by Russia, by a lot of different countries, and so that continues to underpin a high level of support for gold right now.
All we need is another bank failure.
Can
to
I
put
ask you,
it all up.
Michael?
Yes, sir.
Michael, I wanted to ask you a quick question. One thing
Sure.
that concerns me about gold is the RSI versus the price, in that it seems like the RSI peaked when we were at around 2,000 and change, and then we went on this other run, but the RSI seems to be weakening during those other advances. And sometimes that's an indication of exhaustion. Do you see that as a problem, or do you think that can get resolved very easily?
I don't see it as a problem. I see it as a very near term that I leave open, that we could get one big swoosh lower, which would complete this small wave two. I do see that for sure.
It explains the short-term weakness to you.
Yes, it does. Absolutely. Absolutely. The one thing that's actually surprising me, and Jim and you and I've talked about this as well, is that silver, let me see what it's still actually doing today.
I was just going to mention silver's the laggard.
Silver's a laggard, but look at how it's hanging out and holding itself above
Yeah,
25.
it's hanging 25. Yeah, it's
No,
hanging
it's-
25.
And so
Very
this I
nice.
find to be very, very important, because I had felt for a while that silver was not only going to be a laggard, was going to be left behind. And then suddenly it caught fire and it jumped. And so right now I'm only looking for it to get up to 27 before it does a bigger pullback. But it's the same deal, that we got a beautiful run and it got itself back above 26 this morning. And then look what happens. Boom. But each time it goes up and then comes back down, it continues to hold itself at 25 or above 25. And again, same deal. If I'm looking at my RSI on a daily, it's showing me the same thing, that it's just indicating weakness. And so I feel that if we could go A, B and drop, we still have the potential to break down below 25, maybe down to 24.35, or possibly as low as 24, which is where the 50 EMA is sitting on the daily. So I think, we still have downside potential, but I think that that silver will, once that catalyst becomes crystal clear as to the reason or whatever the people are going to pin for the interest in gold and silver, whether it's going to be the flight to quality, whether it's going to be, that the dollar really does start to collapse. Gold, like so many other things, does not like a higher dollar. But if the dollar starts to give up the ghost and breaks par, wow, gold's gone. Gold will just go. Because it'll be.
I'm sorry. Avi Gilbert of ElliotWaveTrader.net.
I do know Avi Gilbert. Yes.
Avi's a close friend of mine. He actually was a subscriber on my site years ago, and I told him, you need to get your own site, and now he's got 10,000 subscribers. But more importantly, he's one of the best gold silver timers I've ever seen. A few years ago, he gave me a target of 1925 on gold and hit 1924 and fell back, 600-700 points before coming back again. But the point is, he's looking for a generational move up in gold and silver, led by silver. But he said the timing,
because it very well could happen. I don't disagree with that statement.
But he also said he doesn't think the timing is ready yet. He's watching it closely. He says he's very pleased with the move he saw in silver, like you just demonstrated. Now, silver may be not only playing catch up, but maybe trying to take the lead in a race higher. But the question is, timing's everything in trading any instrument. So we're going to have to be careful about the timing. I don't want to chase gold or silver. That's for sure.
Right. I think that there's some other factors that I don't give that much credit to silver that it's going to be a leader, although it'd be nice if it did.
For sure.
Something else I wanted to just show, it's like you were talking about the USA or the 30-year bond. And what I kind of want to look at is just to kind of show this something that I noticed when we're looking at the yield. And so I can come here and I can look at the constant yield, and I'm going to bring it out to a monthly, my maximum monthly chart, because that's where the line chart gets filled in instead of just being these little dots. So let me go over and set that up and we can take a look at that. Originally, I thought that, okay, so here we have yield low, yield high. So this is 1981, where in the 30-year bond, the yield was 15%. Then we dropped, and again, what appears to be 5 waves down, and to the yield low, which was 1.17%. Then we start what should end up being an ABC. But I started to notice, it's like, well, that's not, that can't be all. So because you could label that ABC because it is definitely 3 waves up, but then the size of that put me into that it was a 1, 2, 3. So if we're in a 4th wave and it's holding, it's unable to go really below 3.5 or 3.66, to be honest with you. So we can say 365 for the 30-year bond. That's been a yield that is just kind of hugging. It's just staying right there. Maybe it'll drift up to 4, come back down. But what my work is showing me that we have a very strong potential now versus 6 months from now. We have a strong potential now of getting up and touching 5% before we see a true turn in the yields, and yields drop and the bond prices go back up. And that would just be, in my view, a counter trend rally for bond price, a counter trend decline for rates. I want to make sure to include that because it's something that, it's stuck in my mind. And I was looking at this thing sitting here. It's like, it should be able, if yields are going to really drop, they should be doing it. They should be doing it already because the wave pattern shows that it should, and it's not. It's stuck. And not only here, but it's stuck in the 10-year note. The only one that is getting away with it, which kind of leads me to believe that we might see a little bit of a contraction in the curve, right? The whole talk's been, oh, the curve is expanding. We might see that contraction. And how's it going to come? 30-year yield's going to go up. 10-year yield's going to go up. 2-year yield will sit still. So it's very, very interesting, but and that's a pure technical picture. But we're all sitting wondering how all this is going to happen. And it's like, well, let's just let the market work it out for itself, because I think it will. And it's going to happen just because we're now into an environment where the whole world is saying the Fed cannot raise interest rates. It'll just produce this big banking crisis. It's like, well, guess what, folks? QE is what produced the banking crisis. The fact that we pushed cheap money, and we got a bunch of banks that are now buying back in and getting treasuries to put on long-term hold to maturity without a trader really understanding that you're not hedging for the possibility of interest rates going up. So really what we've now confronted is a situation that was produced by the Fed, and then the banks not having smart enough traders to actually hedge their position against risk of an interest rate rise. And now we have a banking crisis. And to believe that it's all settled is nonsense. There's $2.2 trillion in unrealized losses in banks because of interest rate hikes against positions that they're holding. And they can't sell that position because they're taking a big loss. So they're between a rock and a hard place. What do we do? So the Fed should not raise rates so that our banking system can get over the mistakes that they've made? Or do they wait in line for the banks that are doing well, like JP Morgan, who will walk in and pennies on the dollar, buy up what they want from First Republic? It's a very, very interesting situation. And one more thing I want to add to the conversation about it used to be the canary in the coal mine, but the canary died quite a while ago. The 800-pound gorilla in the coal mine right now, commercial real estate.
Yep.
And if people don't start having that conversation, then we're misleading. Now, I live in San Francisco. Our vacancy rate downtown right now is 29.4% and growing.
Same in New York.
Metaverse, Salesforce, Google are all looking to sublease all this real estate that they put leases on before the pandemic. And they can't, there's no takers. Nobody wants them. It's a zombie land downtown in San Francisco. Mom and pop, they're done. They're cooked, they're out.
New York's the
Even
same.
even the bigger chains, Starbucks, Pete's, all those, they're closing up. Why even be there? Why pay the rent? Because they can't make the rent. So it's in a very serious situation. So here we are watching the market, and we're going to call the markets we're in a new bull market. I've not seen a bull market start on such poor fundamentals. And I've been an analyst and a trader for over 40 years. I just have not seen it. So I take a different view. I think we're in a counter trend rally in the equity markets. Absolutely. And is there more room to the upside? Absolutely. And I also have a fib that takes me to 4301. So I'm right there with Harry and Albie Gilbert, right there. But it doesn't, it's there and the potential is there, but it's not really, I don't think we can say that's where the market's going to go.
Well,
So-
you guys are aware of who Joe Granville was. Remember him?
Totally no Jan Granville. Yeah,
Yeah. He coined the phrase, the market climbs a wall of worry.
absolutely.
And the market will always discount in 6 to 9 months in advance. It always does it. So what you saw from November of 21 to beginning of this year, or even March, whatever the bottom was, well, a year and 4 or 5 months, almost a year and a half bear market. That's what you saw. Nobody was calling it a bear market. That's what it was. When you have
Right.
NASDAQ down 35%, the S&P down 25%, that's enough for me. That's a bear market. So now we're starting to see a climb up when all this negative news is coming out. Banks are going out of business, and yet the market goes up because it's climbing a wall of worry. I'm telling you, this market technically, because I'm a technical analyst and that's all I care about, I look at what the market tells me. Trade what you see, not what you think. And that's what's going on right now. There's too
I
many
like
bears.
that one. Yeah.
Every institution I talk to, every trader that's an institutional trader, they're all somewhat bearish for the most part. And yet they're trading on the long side. Mentally they're bearish, but they're trading on the long side. Why? Because the market's telling them there's opportunities on the long side.
I agree. One more thing that I can add, and if anybody does studying cycles, we had the 4-year, a very, very, very normal, very accurate 4-year cycle bottom recently.
Yep.
And at the October lows of 2022, 4-year cycle bottom. So the launch off of that, beautiful. Wave 2 on an Elliott basis and counter trend on an Elliott basis, the whole thing goes. But there's a couple of ways to read it, because you would think it's like, okay, so cycle high then should come in. If it's a 4-year cycle starting in 22, it's not due to bottom again until 26. But you get a little bit different interpretations of what can happen as it gets up to its midpoint.
Yeah.
All right. Can it top early? Yes. So you got your right hand, left hand type of look at it as to what are we in a bull market or are we in a bear market? It's like, if we want to call it a bull market, then this thing's going to top in 2025 and then head lower, or 20, halfway through.
I think the problem is many people are too longer term oriented. I'm a short term trader, and so in my room, I look for stocks that are trending, breaking out, and have reversed downtrends and are in uptrends. They reverse their moving averages. They're simply in uptrends. And on an intraday basis, I find stocks every day. They're popping, pulling back, and trending in a rising channel on a 45-degree angle all day. I can show you 20 exampals from this morning of stocks that
I see them as well.
Yeah.
I see them as well.
Okay,
But
Michael?
I think it's,
Okay.
yes.
So I was going to say, finish your point if you would.
I just think that it's a counter trend.
I got you.
Still up, but it's counter
All
trend.
right. I was going to, Harry, since you did a nice intro on all the stuff you look at, let's get your screen up there and let's start checking out some of the stuff you're watching.
Well, sure.
I have a couple of stocks I want to throw at you that you can put into your thing as well that I thought might be interesting. I'd like to get your view on it, but let's look at your stuff first.
Well, first of all, I got to get to, let's see, share screen.
Yep.
And we'll share this one. Hold on. And what do you see now?
CDLX.
Screen and all that stuff on the left. You can explain,
Okay.
how that is very important.
Yeah.
The volume.
No, again, like I
all
said,
that kind of stuff.
Like I said, I'm a short-term trader. Here's some of the stocks we traded this morning. SNTG, when it broke out, it exploded. It had a beautiful falling wedge. It broke out with volume. We went long, and it hit both my targets. We got out. And this going on and on all day with stocks that are popping, coiling, wedging, making day trades Look at this one. It literally went from 2 and change to 24 in an hour and a half. But I got everybody out early on this one because I thought it's ridiculous. But you know, these stocks, and especially if they're Chinese, they're insane. But you got to trade them for what? Trade them as you see them. Trade them the way they go. Intraday trend.
Harry,
Yeah.
how do you set your targets?
I set my targets based on several parameters: measured moves, overhead resistance, channel top targets, and things of that nature. And if and I'm always looking for different ways, and also Elliott wave analysis. For example, for my way of thinking, with TGTX had a 1, 2, 3. This was a wave 4 flag, and I gave them a target of 31 and a half up here on a mid-channel target. Hasn't quite reached it yet, but here's a beautiful reversal from a pullback low of 23 and change to 30. This is just 3 or 4 hours.
And that's today's action only?
1 minute chart intraday. This is today's action only.
Wow. So that's those ones you're showing here, big pops, huh?
Yeah, well, look at Zixy's another one, ZYXI. I know this company inside and out. Here's what it did this morning. It popped from the perfect little bull coil here. See it? Broke out with volume right there. That's where we went long at about 12:15, and here it is, 14:35. 3 hours later. Yeah. And I got dozens of. I mean, you wouldn't. Even a little LABU popped and pulled back when it held this here. He went long when it went above the moving averages at 584, and it went up to 610. I mean, not a lot, but it's a nice scalp trade. And it has look to me, it has a 1, 2, 3, 4, and maybe more upside. Again, Mike, I'm not an Elliott wave aficionado. I know enough to be dangerous, but I also know enough to incorporate. I know enough to incorporate it by trading that in general.
Right. No, I'm following you.
Measured move, okay. Elliott wave, overhead resistance, channel top targets. I've been doing this for a lot of years. I wrote a book called Profitable Day in Swing Trading that explains my theories and analysis work. But every day I come in, I'm giving people swing trades. I'm giving day trades. Here's a swing at Amera. I know this company inside and out when it broke out through 7 just 2 days ago. I gave everybody a swing trade on it. Today it hit 855. It's already 20% up in 2 days.
Nice.
So, and my target's up here in the 9.5 zone. Beyond that, it can go a lot more. Take a look at this chart. We nailed this stock coming out of this base right there at around 6. It went to 40, I believe. 47, sorry. 6 to 47, and that took about a year. But look, anytime you get a 6-7 fold increase in a year, it's worth holding, right? So anyway, there's a lot behind my theory about the technical analysis work. Look at the volume coming through on TGTX right there. I put a swing trade for my people out at around 7.5 3/4. It's now in the 30s. Yeah.
So Harry, the combination of the technicals, and then you're also factoring in the volume jump, and that kind of gets you very interested.
My interest lies in price pattern recognition, because stocks form the same patterns over and over in all time frames. Now, I used to do this on daily charts, but I realized back in 2000, the market crashed. I didn't want overnight exposure, so I would day trade intraday using 1 minute charts. And when I showed this to Ralph Akampura at one of the shows, he was blown away. He never realized that you could utilize the same patterns on 1 minute charts, and they're reliable. For example, Nanox popped, pulled back, had a double top and pulled back, and had a nice, what I would call a pre-market bull coil right here. Now they came out with FDA approval today. When it broke out there, we put a day trade on at 8. Look at this spike, 1160. Then it came down and broke back out again and went double topped up there. Quite frankly, on a daily chart, look at this reversal. Huge volume, 25 million shares in it, only half a day. This is my target for a swing is 14.5, 15, maybe 16. On a momentum play up there.
I will add, Harry, that I totally agree with you. If you're looking at chart recognition or just the recognition of what the market is doing in price action, it does repeat over and over and over again. It's the whole basis of Elliott.
Yep.
So I totally agree with you. And I don't care if you're using a 30-second chart or a 30-year chart. It's the same patterns.
It's amazing. And you know what? Technical Analysis of Stock Trends by Edwards and McGee was written, the original edition was 1948. And they've done 11 new issues and new upgrades rewrites, and yet those patterns from 1948 are the same as to 2023. Because human beings are involved, their emotions and their actions are involved, and so when a stock runs up, they sell, and sometimes they buy and they create a coil or a flag or a continuation pattern. And if you watch the continuation pattern for the price volume surge, I coined that phrase many years ago, the price volume surge, a combination of price and volume breaking out of a consolidation is one of the most reliable day trade and swing trade patterns I've ever seen, and that's what I incorporate in my work every day.
Beautiful. It's great. It's great work. It looks great.
Harry, what's a volume buzz again?
This is the coolest thing you'll ever see. Volume buzz is you know how great computers are? This calculates at any 1 minute or second of the day what that volume is today, as opposed to the average of the last 100 days in that stock. At that minute, you can see it's changing second by second. For example, in GDC, it's trading 20,344% more volume than average over the last 100 days. Now that's a huge number. But look at SNTG, 18,000%, 7,000%, 6,000, 5,000%. You're talking 50 to 100 to 200 to 300 times more volume than average. That tells me that money is flowing into that stock big time. And that's also an indicator. If I see a big volume buzz, even pre-market, and if I see a stock pre-market trading 10 times normal volume, it tells me something's up. And that's the only time I will go into my news service and see what the news is, because I want to know what's triggering this move. If there is some big news like an FDA approval or major contract, or so, so just any news that could trigger, like NNOX today. Just to give you a quick example, they announced FDA approval of their non-radiation imaging system. They have they're basically using X-ray. It's like a X-ray type body imaging with no radiation whatsoever. And FDA approved it today. And I've been following the stock for a long time. As a matter of fact, we bought it here after the IPO on the breakout there at about 35, and it went up to 90 in a few months. Came all the way down. And then today, FDA approval. Look at that bounce, 25 million shares. And it's up 55% in price. And that's off the high. The high was way up here earlier, but it spiked up. Trading was halted to 1168. It's 948, and it's still up 55% on 22.8 million shares. So yeah, but if the news was that big, that's why I watched that early pop coil, and I told my people when it breaks out, I don't think this is going to be just a 1-2. It's going to be a 3-4-5 probably. So anyway, you can see how that came to fruition. The breakout over 785.8 twice. It hit in the 11s. That's a nice percentage move in a very short period of time for my traders.
Yeah, that volume buzz very, very, very helpful to get an idea of where the action is. Huh?
Really, every morning, if you look at, well, the two things I look for every morning pre-market is the percent gain list, which is published a lot of different places, pre-market percent gainers. Then I look at the volume of those percent gainers. And if that volume is substantially 5 to 10 times normal, I put it on my focus list. Every morning we have a focus list of 15 to 20 stocks. And then I spend an hour online with my people before the market even opens, and I go through all of these charts on a webinar that I give constantly all day. And I'm showing them which patterns I believe are the best ones for day trades. And I'll issue half a dozen to 8 buy alerts on stocks that I think have the best chance of being good day trades at. And here's some of them. SNTG was one. QH was another. It's falling apart now, but look at that move. Nanox, Nerve. Look at that pop and flag and breakout. Vertical. CDLX, TGTX, Zixi. These are all stocks that had nice moves pre-market. The volume picked up, and/or I like the pattern on them. Combination factors. And here's another one. OC. I mean, there's so many charts on my list here of stocks that have popped and run.
A lot of healthcare and pharma, huh?
Yeah, Harry, these are a part of the NASDAQ composite?
Are they part of the NASDAQ composite? Oh, you mean
Yes.
Very few of them ever are bulletin boards. I don't trade those stocks. They got to be. I don't know about the NASDAQ composite. How many stocks are in NASDAQ composite?
I think over 2,000.
I do 100.
Yeah,
no, that's the NASDAQ 100.
No, and that's the NDX. No, they're not part of the NDX. Right.
Right.
Some
So
of it-
I was wondering if they're a part of the composite, which of course is much larger. I'm not sure the exact number, but I think it is over 2,000.
Some may or may not be. I know they're NASDAQ listed, but they may not be NASDAQ composite.
Okay,
Because
I know that once,
um,
when they included pink sheets, they changed it to something else. I'm not sure what they call it now.
Yeah, these are not, these aren't pink sheet stocks. None of, I won't trade them.
Not anymore. No,
I-
they're definitely not.
I also don't trade stocks under $2-3 usually.
Now, Harry, I got a quick question for you on Devon, DVN. We see there that the volume is down 41%. And if the stock was dropping, is that telling you anything as far as maybe it's not a real, maybe it's a drop that may not follow through?
Well, there's two things here I
In
want to
other
point
words,
out.
is there anything bullish to having a stock go down or not do much, and then the volume is drying up like that, 41%
Well, first of all,
drop?
it's an inside day on lower volume, and it's below the moving
Mhm.
average. So this green line is my 10-day moving average. If I could see this,
Gotcha.
if he gets above 54, there's a shot at being 55 and a half, 56 and a half. I have lines that I put. But you see a lot of lines on my chart because I'm looking for lateral resistance and support. Also, point this out for you. This pullback low here, 51.50. This low, 51.40. This is the double bottom. There's a gap in there. This is support. That is your new channel. So if this chart holds that level, fine, but it's an easy stop. Stop under 51, period. And if it goes, the first thing you want to look for is take out the long-term or intermediate-term declining tops line for starters. Then this is like a left shoulder, head, right shoulder. Do you see it? Left shoulder, head, right shoulder.
Yes.
It's like inverse head and
Yeah.
shoulder form. So any move above 56 3/4 in that area, the stock could go vertical into the 60s. So
Yeah.
I think it's a bullish chart, but the volume is not there.
No.
Underlying technicals don't look great. I'm bearish on oil in general. My gut feel is that this is going to fail and roll over and retest the lows at some point.
Right.
But I'm negative on several oils. I could show you a bunch of oils that look terrible in here. I think oil, here's the problem. They've all come down quite a bit. This one has come from 78 to 44, almost in half, but now it's bounced. So the next direction, the next move will be, I think, a directional move. Meaning if it breaks out across here, you might see it run up into this zone there. So my target would be 59 to get up to that gap.
What about Snap? My kids tell me that it's still as popular as ever, and they just got a guy from Meta to come in to try to help them sort things out. Is there anything there of any value? Because it's certainly down.
And I'll tell you what I would tell any of my subscribers who just told me what you said. Fundamental BS. If you want to rely on fundamentals, when I look at technicals, this is a massive, major breakaway gap to the downside, a big volume. And it's unable to bounce. It's unable to bounce. What I would do is draw this line here and look at where support is. And there's a chance that this goes down to 7.5, 8 range. Maybe it bounces off that. It creates a double bottomer. But it was I got to tell you something. This was a beautiful base pattern. I looked at a V bottom here, a right-handed extension, and then back in fill. It looked like to me it was forming a big coil or wedge, and they were going to break out. Instead, it broke down, retested, failed, and this is an ugly break. I wouldn't touch it with 10-foot pole. Not now. This may take that kind of technical damage could take weeks or months to rectify or develop. It may have to go sideways or bounce around for a while, form a bigger base, and then break out. But for me, the best time to buy this stock, believe it or not, is above 12.5. When it breaks out above 12, above that line, that's where it's on its way at 17, 20, 25, 30, whatever. But to buy it down here, you can risk sitting with it for weeks and months and going nowhere.
Yeah. It's an interesting story, but a bad looking chart.
Yep.
What about CHPT? You know, the guys are going to have all those energy filling stations.
Charge point. When you one look at this chart, what does it tell you?
Well, it looks like a lousy chart,
And it's
but
got
it
a
looks like it's down near something that might do something.
Not only that, but this is all-time lows. There's a stock that was in the 50s. It's trading at 8. And until I see at least some sort of breakout across the declining top line with volume above there, I would actually wait for it to get above that this is the 50-day moving average. If it got over 9 3/4, 10 with volume, then I'm in for a run, up in the low to mid teens. But for now, what's to prevent this from breaking down and being a $5 stock? Nothing.
Yeah.
I don't
They
pick
both
bottoms.
are catching falling knives, right?
Right, you know what they say? People who pick bottoms have smelly fingers.
Have what?
What's that?
People who pick
She
bottom.
missed your quip there.
What's the
I said
punchline?
people who try to pick bottoms get smelly fingers.
Bad.
Yeah, I know.
And there's another one that's in that UMC is kind of in that battery thing, I think, too, and other
Well,
stuff.
actually, I like this chart, and I actually have a swing trade on it, folks. Inverse head and shoulder. See it? Left shoulder, head, right shoulder. Breakout there.
Yeah.
It's returned to the neckline, the breakout right there. So it's either a buy right here with a tight stop, and this is your new channel. Probably you never. By the way, Tom DeMark taught me one thing. I've talked to him personally a few times. Never draw a trend line off the spike bottom. It's always after the first pullback low. So there's your trend line. How about that? It's a nice parallel one that if it holds here, I would look for a retest of 9 and then a run up in that zone near 10 and ultimately higher than that. But this isn't a bad chart. It broke the declining tops line. It retested it. It held around the 50. It ran up and created a new high. Started a new high here. This is a nice 1, 2, 3, 4, maybe. I don't know, Mike. What would you think? Would you call this a 4-way move?
Michael?
Yeah, you could. I liked your other work better.
Yeah. I mean,
I like what you're saying before, and just let the Elliott work itself out, because right now, I like what you were talking about before.
Okay. Well, anyway, in this case, it's an inverse head and shoulders, a breakout to resistance. Notice this high back here. It got just beneath it, or just to it, pulled right back. So now this is the new resistance line, right around 9. You get up above 9, you can see 10 or 11. But it's not going to be a big mover. It doesn't look like. But look at that move ahead here. Went from 2 1/4 into the $11 range. It's a nice 5-fold increase.
How about Palantir, PLTR? Last one for you. PLTR. Palantir.
Yeah, I know it. Well, the positive is this is a pretty ugly chart too. But the positive thing is, excuse me, look at the long-term declining tops line. So it got up to it and pulled back.
Mm-hmm.
It's a little sloppy inverse head and shoulders as well. And by the way, I'm seeing a lot of stocks like that. Let's call this a left shoulder here, right shoulder there. I mean, the head there, it's a weak head, and then a right shoulder there. So the neckline of this one is right about there. I wouldn't touch it until I see it take out the declining tops line and this resistance here. So over 9, 9.5 with volume, I'm interested. But even then, you got resistance there and there and there. Yeah, it's a sloppy chart, and it doesn't tell me much other than, again, I wouldn't anticipate. I keep telling people in my group, don't anticipate, wait for the move to give you the trigger. Wait for the signal.
Yeah. And of course, that volume buzz is really a great thing to keep an eye on. That's for sure.
It really is.
Yeah. All right, we are near the top of the hour, so we're going to go around the horn and explain to everybody again who we are and how they can get a hold of us and what you're going to do for them when they contact you. So let's start out with
And
Sonny.
if you want to
how
talk
do people get a hold of you, son?
you want to talk a little bit about your presentation this week, what you're planning on talking about, Senator Trader,
Sure.
that would be great as well.
Sure.
Yeah, that's a great idea too. Yes, son.
I've got
a little
to
bit about what
talk
you're going to talk
on-
about there in presentation.
I'm going to talk on Wednesday at 1 o'clock Pacific time, 4 o'clock Eastern. And we're talking about systematic trading with Sunny Bands. It's the synergy trading is about organization, right? So we're going to talk about systematic trading a little bit. And I am a mathematician, trader, programmer, author, been trading for 42 years. I love to mentor, tutor, and consult people. I have Sunny Bands and lots of other indicators available for sale. And I do a podcast. In fact, both Michael and Harry have been on it. And what else do I do? I write a Sunday night Sunny Side of the Street newsletter, and I do a live trading room on Tuesday mornings at 7 a.m. California time. My website's moneymentor.com. If you want to chat with me, my phone number is 760-908-3070.
Perfect. And Michael, again, how can people get a hold of you? And do you have any special offers you're extending?
Special offers, not at this time. I will be presenting on Wednesday, and I'm presenting at 1 p.m. Eastern, 10 a.m. Pacific. So I get the hour before the Fed. Lucky
Oh,
me.
boy.
I know, right? I just like
Oh,
it just the
geez.
way that the cards fell. And my discussion is going to be on developing your trade rules and mindset, which I find to be very, very important right now, and no matter what you're trading. And again, people can get a hold of me. You can always send me an email, michael@mjf1partners.com. I always answer my emails. You also can check me out on YouTube. Channel is Traders Helping Traders, and then my name. Somebody did hijack it, but they're kind of losing a little bit of importance. But it's Traders Helping Traders, and then my name. And also, you can leave me a comment there with any questions, and then I will get back to you on that manner. I also have a trade room, but we're transitioning into a newer and improved trade room and still working out all the bugs and getting that together. But it's going to be including quite a bit of institutional grade information on that is applicable for day trading.
Sounds good. And Harry, you do have a special offer, so you want to extend that? And also, when will you be talking during this week?
And I'm speaking on Wednesday too, and I'm not sure what time it is. I think it's 4 o'clock because it's after the market close. So it's, I think, 4 or 5 p.m. Eastern. And I don't know if you see my screen, but I have my front of my page up with my picture on it.
You can share it now if you want.
Oh, I thought I was sharing. Okay, hang on a minute. Share screen.
Yeah, unfortunately, with this platform, only one person at a time can share. Okay, now we see it.
You're up there.
Okay.
You're up there now.
Yeah, so I would always give everyone a 10-day free trial. You can come in for 10 days. You click on free trial and just put your name in there. No credit card. All we need is your name, phone number, and you put in your password, and you come in for 10 days, full access. That includes my day trading room. That looks like this. Hang on a sec. And there it is. You can see people sharing and talking about stocks, and all day I'm giving. In the morning, if I go back, you'll see I'll put out a buy alerts in the morning. There they are. There's one SNTG, NERV, QH, etc. And also I'll put out swing trade alerts when I think it's appropriate. I think here's one there. Where was it? Swing trade alert. Anyway, bottom line is it's a place with some really sharp traders, a place where I think you can feel at home. Yeah, and often people in there will mentor you. You can always click on my name, and like in this case, Susie Q, it says private message. If you click on my name, you can send me a private message. You can send an email to harry@thetechtrader.com. I'd be glad to answer your questions. But it doesn't cost you anything, and what do you got to lose? Come into my room for 2 weeks for free and check us out and see what we're doing.
Exactly. Okay, that's great. And as far as optionprofessor.com, where I have my site, we do have a one-on-one with myself for a 1-hour review of the markets you're doing using my indicators, and also share the ideas that we have as well. That's at optionprofessor.com. Hey guys, thanks a lot. I think we definitely went through an awful lot of exciting ideas and exciting things, and people should definitely get a hold of you guys so they can learn more. Right now, I'm going to turn it back over to David.
All right, and yeah, I'll just go over this again. The full Synergy Trader event starts tomorrow at 10 a.m. Eastern Time. The theme for this one is psychology, discipline, and time management. We have a full 30 presentations scheduled, 10 each day. So 10 a.m. Eastern Time on Tuesday, Wednesday, and Thursday. We'll be getting started. Sunny Harris will be at 4 p.m. Eastern on Wednesday. Harry Boxer will be 5 p.m. Eastern on Wednesday. Michael Filighera will be 4 p.m. Eastern on
Thursday. I was wrong.
Thursday. Yeah, on Thursday. And let's see, currently the option professor is scheduled for 5 p.m. Eastern on Thursday. We might adjust that a little bit because we're going to record his presentation after today's event. And yeah, be sure to join us for this. It'll be a great event, a lot of good information. And so besides that, just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and Substack and your favorite podcast app to get the updates that way. Also, you can just go to TimingResearch.com to get access to any of the past shows or presentations there as well. And okay, so just want to thank my guests again for today. Sunny Harris of MoneyMentor.com, Harry Boxer of TheTechTrader.com, Michael Filighera of LogicalSignals.com and TradersHelpingTraders.com, and the Option Professor of OptionProfessor.com. So that's it for today. Thanks, everyone.
Thank you so much, David.
Thanks, Dave.
You.
Thank you. See you later.